awesome edition of our Billions Educational Series. We have a legend with us, Mark Fisher, a man who needs no introduction in the world of trading, one of the truly living gods of trading in Wall Street. Mark, thank you so much for coming on today. It's our pleasure.
Hi, Alex. I wouldn't consider myself a living god, but anyway, what's up?
This is what I've been told by other people in Wall Street. This is what I've heard. And your legend precedes you to no end, Mark. The things I've heard about before this interview. But let's get right to the chase. Oil. Is it going to have a future with so much electronic mobility going on?
I think oil is going to be a surprise in the next couple of years, because as firms cut back investing in oil long term, that's going to create situations where OPEC will be able to control the price and supply even better. And depending on what happens with COVID demand and how quickly COVID demand comes back, it wouldn't surprise me if oil overshoots to the upside just because of a lack of investment, and because a lot of the drilling that's taking place in shale has really disrupted those production sites. So I think if you ask 10 people, 9 out of 10 people don't think that oil has a shot to go back into the 60s. And I would probably think that depending on what happens with COVID, in the next 2 years, you're going to see oil with a 60 print on it at least.
Could oil go back to the hundreds the way it was back in the day, you think?
I don't think it would ever get back to hundreds, because it would induce too much supply to come back on the marketplace. But I do think that you could have a sustained period in the 50s and 60s as supply gets, people do not want to invest in, companies don't want to invest in supply chains anymore due to all these mandates like what you see going on in California with electric vehicles only by 2035, et cetera, et cetera, et cetera.
Oh yeah, it does seem like a doomed forecast. Well, how about the election? Do you think oil will be affected by either Biden or Trump's win?
Well, I did think so originally, but I'm not sure about that because of Biden's stance on fracking seems to have changed a little bit. He's a little more open to fracking than I thought he used to be. But I don't really know. Politicians speak one way and talk another way. Obviously, again, I don't think the landscape is as interesting for oil as it is for natural gas. I think natural gas, as supply cutbacks of oil take place, the associated amount of gas that's produced is going to cut back. And since natural gas is going to be the energy of the future for the next 20 years, I'd be surprised if natural gas doesn't rally, as well as natural gas probably being an inflation hedge, for lack of a better word. So natural gas, to some degree grains, to a large degree grains, I think you can see people buying them as inflation hedges more than you'd see people putting on, bond positions. So I think, you could see it by looking at a chart of what's happened to grains in the last month or so and natural gas in the last month or so. You can start seeing it's pretty obvious that these are places where people are putting on bets to hedge out inflation risk in the future.
Does the stock market scare you with the way it's come back so quickly?
No, not necessarily. I'm not a believer in the stock market, but I think that to some degree, people feel that it's safer to put your money in the stock market than it is in the bond market. And since people have, alternatively look at the stocks versus bond ratio, whether it's 60-40, 70-30, I think now people have more faith in corporations than they do in the government, which is a sad commentary on where we are, but that may be the reason why that you see people and investors feel more comfortable, owning stocks, especially technology stocks that have growth, than they do in owning, bonds that yield basically nothing.
What a very interesting comment. People do seem to have more faith in corporations these days than they ever have before, probably much more so than the government, something I really hadn't thought about.
Yeah, but the one thing about that, the one thing that throws that for a loophole is you see all the controversy around all the tech stocks with like the New York Post fiasco that's gone on. And I'm not here to judge whether it was right or wrong, but again, that paradigm disrupts to some degree the comfort factor that people have in owning those stocks when you see technology getting attacked from what happened with the Post. You see what's going on where you're seeing a wave of European governments wanting to disband big tech for no other reason than it's big tech. So again, I don't know if the stock market's going to be as comfortable going forward in big tech as they will maybe in large cap value, but that's going to be a message that will play out in 2021.
Well, that'd be great for every fund manager who doesn't have 20% of their fund in four stocks. So,
Right.
So reverting back to commodities, is there a commodity that scares you at all?
What do you mean scares me?
Is there one that you would avoid? Is there a commodity that you would avoid over the next 5 years?
Avoid? No. I think everything's a trading opportunity. I think that avoiding means, again, we trade from the long side and the short side.
Do you think there's a structural problem with any commodity over the next 5 years? The way oil had its issues from 14 to now, I mean, whether it's coffee or cocoa or frozen concentrated orange juice, is there a commodity that you would be skeptical about next year?
I think the only thing I'm skeptical about commodities really is different than what you're asking. I think my question is, are the commodity markets deep enough to handle a structural surge in demand into those products? So for instance, if everybody woke up today and decided to take 2% of their assets and switch them from stocks and bonds to commodities, the markets and commodities are not deep enough to handle that open interest. Because remember, in commodities, for every long, there's a short, right? So if you get a paradigm shift where people decide to switch 2% of their investment allocation to commodities worldwide, the markets aren't deep enough, because how much will the markets have to rally to induce speculators and the suppliers and the trade to take the other side of those bets? So they're not like the stock market. They're not like the bond market. People don't realize that the commodity markets, even energy, or even definitely grains and definitely natural gas and copper, they have limited, and the breakfast commodities, they have they're not able to handle a big increase in demand without seeing the market's prices jump to ridiculous levels.
Well, that would be my worry with oil, that if all of a sudden post-COVID there's a huge surge in demand, with so many energy companies having stopped their CapEx activities and so many other companies having gone bankrupt, there could be this window where there's a huge supply shortage, or is that something that I should not be worried about?
No, that's what I'm saying. So can oil get back to the 50s and 60s? I think so, just for the reason you said. But it's some number. People are going to, there could be enough people get short. I mean, are people going to want to get short coffee at a number, cotton at a number, sugar at a number, cocoa at a number? I don't know. Those markets are not as deep as people think.
Do you have a favorite area to be invested in right now, or are you just a general trader and there's nothing that really...
No, I think that we're, I think that out on the curve, being long natural gas, 21, 22, 23 is probably attractive for the reasons we said. I think the natural gas stocks, for that reason, like Range Resources, Southwest, if you're tactful about it, probably represent opportunities. I think the grain trading companies, like, ADM and those companies that would benefit from increased volatility in grains, just as you saw Buffett buy all those trading companies in Japan, would probably be, attractive places to go. But, yeah.
Speaking of Japan, would you rather own the yen or the dollar right now?
No idea. Outside my wheelhouse.
Gotcha. Awesome. This has been just an awesome conversation, Mark. As always, you're just absolute brilliant, man. I couldn't be more thankful that you've given us this time. So we've come to the conclusion of our show. Do you have any parting thoughts for our viewers?
Yeah, whatever the consensus view is typically, when it's right, you're not going to make money on it. And when it's wrong, you're going to get killed. So it makes sense to think outside the box, because consensus never really has, even if consensus is right, never really makes the money that you should make. So you make all your money in the 20% or 50% of the time you can find something that doesn't seem to make sense. Because it comes down to the same thing. When people know why something's going up, it's usually over. When people know why something's going down, it's usually over. It's times when things go up and no one knows why it's going up that those things continue. And it's times when things are going down when no one really knows why it's going down. That's when they continue down. That's basically the philosophy we follow.
Awesome. Well, this was just a really great experience, Mark. Thank you so much, and stay safe during these crazy times.
Take care, Alex. Stay safe.